What is cracking, cryptosphere? This is Cryptogenic coming at you. It is late night on Wednesday, February 17th here in California. If you are in other parts of the world, it is for sure Thursday, February 18th for you. So before we jump into these charts here, I want to draw your attention to a free resource that I've created just for you. It's an ebook called Cryptogenic's Road to a Milli: How to Make $1 Million in Crypto with as little as a $100 investment. I'm going to give you this ebook for free if you join my free Telegram group. And there's a link in the description to that Telegram group. The Telegram group is great anyway. I drop charts in there. I drop thoughts in there and ideas in there. I believe you're going to find it informative and beneficial. So jump into that Telegram group today and get that free download. All right. I want to start with the macro picture of what's going on here in the market, because it is my conviction that long-term viability always trumps short-term volatility. And so before we look at the short-term volatility that is surely coming, and soon, we must first take a minute at the long-term viability that we see in these assets. And I want to say, short-term volatility actually increases long-term viability. Why is that the case? Because looking at this Bitcoin chart here, we are now sitting at $51,847. Now, if my target of $256,000 is correct by January of 2022, then we are only going to 5x from here. But if a correction comes and we see this number start to go back down to somewhere in the mid 20,000s range, sub 30,000, then we're talking about nearly, let's say if it goes down to 25,000, now we're talking about 10xing. So if we actually hit this target, it's better for us if we go down to 25,000 and then launch off towards the target. Why? Because it gives us a better buy-in opportunity, and it gives us an opportunity to 10x our money. And my basic rule of thumb is that an asset that does not have the potential to 10x my money is not worth investing in. All right, now, this is the long-term picture. This is the macro picture. Now I'm going to give you a little bit of a micro picture because I want us to see that there's some evidence, strong evidence actually, that things are about to get volatile and that we're getting ready to see a pretty major pullback. Now, to illustrate my point, I'm going to show you something here. This is the Bitcoin Cash chart. Bitcoin Cash is very strong. Looking at a comparison of the RSI and the price action. The RSI, the only thing you need to recognize about this chart is that the RSI and the price action are moving in the same direction. That's what's supposed to happen. If the price action is moving up, the RSI should be moving up. If the price action is moving down, the RSI should be moving down. Okay? This is what it should look like. Now we're going to look at the shorter term Bitcoin chart. This is Bitcoin on the daily. A moment ago, we looked at the monthly chart for the macro perspective. This is more of a micro perspective. And notice what we're seeing. We've got higher highs in the price action, but lower highs in the RSI. Actually, I think if I look at this in the 4-hour, it might even give us a little bit better perspective of what's going on here. So check this out, just a little bit more precise. And we see the same thing. Higher highs in the price action, lower highs in the RSI. That is called bearish divergence. The RSI is showing us the direction of the momentum of the market, and the direction of the momentum of the market is bearish, even though the price action is bullish. So the price action is fooling you into thinking buy now because BTC is going to hit $250,000 in the next 5 days, but the RSI is saying don't buy now. This is not a good time to buy. The momentum for BTC is actually moving downward. Now, That does not mean that 51,000 is absolutely the top. I mean, we could actually see this move up. We actually don't know where the top of this is yet. But if it goes higher, that will only confirm the divergence even more. So I expect somewhere in the mid 50,000 range, somewhere around $55,000 to $56,000, I expect Bitcoin to go into a pretty decent correction. Now the question is there any other evidence elsewhere in the market that a correction is coming? Because the thing that we need to keep in mind is that whenever Bitcoin corrects, it also begins to pull down the other assets in the market with it. Well, let's look at the Ethereum chart. Lo and behold, we've got the same phenomenon happening in Ethereum. Higher highs in the price action, lower highs in the RSI. That's bearish divergence. The RSI is telling us that the momentum for Ethereum is actually downward, even though the price action is upward. And in actuality, if you look at the RSI here in Ethereum, it's even stronger than the RSI here in Bitcoin. So we've got strong bearish divergence here in Ethereum. Now, this is interesting to me. I like charting things against Bitcoin. But first of all, if we look at Litecoin without looking at the RSI, what we're actually seeing is that we're in this bullish channel here. Like we're channeling upwards, and it's leading us, higher and higher and higher. And it looks like, man, we're in a good place. And this is a channel. This is not an ascending, broadening wedge. This is not a bearish progression in and of itself. This is actually a bullish progression in and of itself. However, if we look down at the RSI, from this high to this high in the price action is higher, but from this high to this high in the RSI is lower. So once again, we are seeing bearish divergence in the RSI with Litecoin. Litecoin, the RSI is telling us the momentum is moving downward. Even more telling with Litecoin is when I look at Litecoin against BTC, the LTCBTC chart, what we're actually forming here is an ascending broadening wedge, which is a classic bearish pattern. And so, and even the RSI is forming this ascending broadening wedge. And so it's telegraphing in multiple directions and from multiple data points that the odds are we're moving towards a correction. And I'm expecting and actually hoping for LTCBTC to come back down into this tradable range, because me and my trading group are going to long the heck out of it here and make a killing, honestly, if that happens. So, it's harder to chart, how far the pullback's going to be with these other assets like LTCUSD. I mean, we've got some support lines drawn here, 192, 185, 165. If it breaks beneath 192, first it's got to break beneath this line, and then it's got to break beneath 192. And it could go down, I imagine, as far as 162. Might not. Might find support around 185. Might find support at 192. I don't know. I'm not going to predict that. All I'm saying is that there's multiple data points that suggest that we've got a pullback coming. Multiple data points, except BCH. Look how strong BCH is. You've got this, it broke above this channel, and then it broke above this line. You see the support line? That it's been under that support line since November 2018, and it broke above that line. And so if it could be, looking at the RSI, we could stay above this line. BCH could be. I'm not promising or guaranteeing. Just looking at this chart, BCA looks pretty strong comparatively. Looking at Cardano, we're not seeing bearish divergence here. We're seeing higher highs, not quite as higher. We're not seeing the same degree of higher highs, but still we're not seeing bearish divergence here in Cardano. And so actually, I'm imagining, where's my chart for Cardano? Here it is. What I'm expecting with Cardano, we had this bull pennant here. We broke bullish out of this bull pennant. So I'm actually expecting Cardano to touch the 99, somewhere between 99 cents and $1.02. That's kind of my take profit range. I mean, I'm not taking any profit there, but if I were trading Cardano, that's where I'd be looking to take profit if I were day trading Cardano. which I absolutely am not. All right, folks, just want to say thank you to those of you who have joined my channel, getting ready to post some very important material on the Cryptogenic Portfolio for my HODLers. And for my HODLers, what I'm going to do is I'm going to go through every asset in the Cryptogenic Portfolio and give targets and an exit strategy. Here are my targets, the targets that I'm looking for, and here's my exit strategy. At this level, I'm going to take 5% out. At this level, I'm going to take 10% out, and so on and so forth. And then here's what I'm going to do with it when I take it out. And so my HODLers are going to get weekly videos that simply keep track of every asset in the Cryptogenic Portfolio. And when we hit those take profit levels, I'm going to detail that for the HODLers. All right, folks, as always, just remember that long-term viability always trumps short-term volatility. We must learn how to see short-term volatility as an opportunity rather than a setback. It's always, always, always an opportunity. And with that being said, you'll live a much happier life if you make it your aim to sleep in peace every day, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.